Good morning everyone, and welcome Axia traders to what we do on every Tuesday morning is look at structural market profile strategies. Being Tuesday the 21st of March, and I'm standing in for Max this morning as he is skiing somewhere in the lovely French Alps. Okay, so let's head right into it. So market moving fundamentals. Well, market moving fundamentals forward looking is on Thursday. Just everyone be very aware of there's a large focus on the ECB TLTRO operation. It is the last one, and can banks now lock in 4 years of money at cheap rates? If you actually look at the OIS market, and let me just pull up a pen so I can just bring it to your attention. So if you just give me literally a couple of seconds. So the 4-year period, so it's a 4-year fixed period. And what's really important is that banks, if they were to lock in 4 years in the OIS market, they would be getting close to 0%, whereas on the TLTRO, they'll be getting a cheaper rate. So that's on Thursday. Be very alert. Expectation is for 100 billion. There are some outlier expectations that the market could take up as much as 200 billion, and this will be supportive for the 5 to 7 year sector of the curve. What's very important as well is when expectations start building up, opportunities start building up, for any deviations. If there's really low take up, well, then that might show you, illustrate to you that the market's expectations or the bank's expectation is that maybe rates will remain lower for longer and they're not too concerned. But if the market do expect rates to be rising foreseeable future as the OIS market is looking at the moment, well then you expect a large take up. So keep an eye on that. Should be moving a couple of the banking sector and the European bond curve. So that should provide some opportunity. And at the very least, if you're an order book scalper, it will at least create some flows for you to see where the buyer or seller's intention is. Okay, so just be aware, and that is on Thursday. And this is provided to you by ITCM Markets. So last night we had one of the first polls that came out that caused a fairly nice little move in the Euro USD. Macron seen winning in the French debate clashes with Le Pen. Now we have a couple of French traders at Axia, and a few of them, have been amazing in updating us, especially Max, on the political landscape in France, the various policies, who's perceived as risk off, who's perceived as risk on. And what's very important is remember the general media, the status quo really do want Macron to win. He fits the bill for promoting so-called an economic agenda of the institutional establishment. So that's who everyone is favoring. And if I stand to be corrected, it is this gentleman over here. Well, it's one of the young guys. I don't think it's this one over here, but I think that's one of the young socialists. These are the two socialists, and then this is the infamous Le Pen. So Le Pen was seen last night in the polls actually coming third. Macron came in second. He was had a lot more chutzpah. So that really caused a move in the Euro USD. And last I looked, the Euro USD is up in the overnight markets and going to the European session up 0.4%. But we'll be covering that in a short moment. The betting markets, if you look at a lot of our traders on our trading floor, constantly keep up the Betfair markets up, and what that is showing at the moment is Macron's odds have shifted lower, so he is seen even a little bit more favored, and as a result we've had some good moves. Well, not strong moves, but we've had a narrowing of the spread between the French bonds and the German bonds. That has been the go-to spread play during all this French elections, and will continue to be. And do recall that between 20 to 10 days leading into key risk events such as the Trump election, such as the Brexit, 10 to 20 days is when you actually have some key flow happening in the risk markets. So keep an eye for that 10 to 20 days and looking at the OATs against the Bund. Okay, so let's continue to move on. So overnight markets, this has actually changed. I put this in at about 6:30 this morning, showing the euro being the significant mover, nothing gigantic. The Australian dollar, we had the RBA minutes. The New Zealand dollar continues, to be moving, but the euro is up 0.4%. So if I just double check my rebasing charts for you, just to come notice, up 0.5% now. So this has moved, quite significantly on the futures open in Europe. So those are the main real moves that you just want to keep an eye out this morning in the bond space in Europe, as well as the euro currency, and see how that starts performing. So the euro yen will also be a good barometer for risk on and risk off. So as you can see, it's 0.2. These are the rebasing charts you can see against the dollar. It has plots euro here being purple, the British pound being green. Then we have the New Zealand dollar, the Australian dollar, and the Japanese yen. And this is all plotted against the dollar. Any outperformance against the dollar will be above this 0% line over here. And you can see the clear one as a result of those French elections debate last night is the euro. So, major economic data out this morning. Well, the real big kahuna this morning, because the Bank of England, after the meeting last week, we're going to be looking at a lot of our traders on our trading floor. We'll be looking at the CPI numbers. We have CPI out of the UK. We'll be looking at the core year on year. So this is the main one that we'll be watching. Remember, we still probably have those rebasing effects, so that's why you don't want to focus too much on the CPI headline, because of where oil prices were a year ago. So the core CPI year on year consensus is 1.8%. We're going to be looking at this a little bit more detail at the in our next couple of slides. Previous 1.6%, and we'll actually be looking at something a little bit exciting we'll be doing in our streams going forward. So that's the key, some of the key data points, and we have some more data points out this morning. So if I just show you on the next slide, so we also have the RPI, and then this afternoon we have the Canadian retail sales, which will be also important. So just keep an eye on the CAD or the CGB, the government bonds, as people start wondering. We're already starting to price rate hikes of 50%. Of a rate hike, 50% by year end. And we do know that Pelosi, the Bank of Canada, are probably one of the most dovish of the G7 countries. He has mentioned before that the government, that the monetary policy in Canada can diverge from the US. And they have mentioned, as soon as last year, they could still use unconventional monetary policies, and it was, October of last year. Then we have a deluge of Fed speakers today. We have Dudley. He's joining in and speaking 10 o'clock UK time. He's hanging out with Mark Carney today, so keep an eye out on that. Last time Dudley spoke, when he said rates could be more compelling, wow, we had such a move on the 5-year Treasury, gigantic moves on the 5-year Treasury just before the blackout period, and it was just after month end. So go look at that. I think we'll be posting on our Twitter handle what that move actually looked like on the price ladder. So if you want to have a see, I think we'll be posting out that this morning sometime. So just go, if you don't follow us on Twitter, go look over there. And then we have some Fed speakers. We have George and Mester, both non-voters and both known hawks. And then this evening we have the Bank of Japan minutes. Okay, so key top data point order flow analysis of the morning. So what's going to be really key this morning that a lot of our traders are looking at, besides seeing the flows that are happening in the French election debates and the aftermath of that, is the elections. And what we do on our Zenith platform, that all our traders have on site, is that we actually just look at any outliers. We can see the trend is starting to go firmly up. So we haven't really been past 1.6% for over 2 years. back in the back half of 2014, almost two and a bit years, but it's a supreme outlier is above 2.1%. If we have something below 1.5%, well then the core is not showing sustainable trajectory. So below 1.5%, 1.4% starts becoming a real big surprise towards the downside, and at 1.2%, well then we'll probably have the Bank of England having to actually start cutting rates again. But that is not expected. But always know your outliers, because your outliers, they happen once, every 12 times you prepare. But if you prepare that once every 12 times, well, you can actually turn around your month, or you could have a really, really good day. So this is the key, the key data point for us today. Now, what I do want to show you is actually how it reacted the last time. So let's have a look. Exactly, I'm going to be looking at GBP against the USD. We're going to look at it just for a minute, as well as the gilt reaction. The main reason we do this is because we do it with our younger grads, so they kind of acclimatize quickly to how the market does move when it happens, so they get used to the type of speed and the rhythm of the market, and how it really evolves and how it really develops. So let's look at this, and they actually practice this on our replay platform. That's very exciting to really accelerate learning and performance. So let's have a look at this quickly for you. So it's literally going to be playing, so we're 10 seconds just before the number. So bear with me, this is the first little test live on a stream, so let's hope this all works. So we literally 10 seconds beforehand, another 5 more seconds, 4 more seconds till the release. The number comes out. It comes out worse than expected. This is the gilt on the right hand side, this is cable on the left hand side. We started around 26, so there was about initially a knee-jerk reaction of about 25, 26 time. We've done our 30 ticks in cable. The gilt, we see a large order over here at around 125.30. It's holding a bid, but you can see cable has effectively moved about 35 ticks in the first instance. You can let this low volume node, and now it's auctioning in this area and range over here. So for any of the young guys, have a look how this evolved, how this affected the Bund. Unfortunately, I couldn't pull up the Bund this morning on that. So that's just a quick little look at the reaction in the UK markets as a result of the CPI figures from last month. Okay, so now let's move on to where really the main gist of this stream is. So market profile chart analysis, we're going to be looking at weekly structure, at some magnetic targets for predominantly the Bund. We'll be looking briefly at the Euro stocks and the S&P, and some potential trigger points for possible momentum plays. I just wanted to bring something to your attention that we saw from our, from where we get a lot of our research. For the charts of the week, and we'll be showing a little bit on the next slide. The Euro stocks has historically asymmetrical long and short positions. I'll show you this actual chart with 3 standard deviations below the close on the 16th. So over the past 5 days, quite large amounts of both longs and short allocations have been determined. So whenever the market gets a skewed positioning, sometimes that's a spell of an imminent move. You can do your own research on that, but we'll look quickly at what that positioning does look like. But it is at extreme levels. You can also see it's the largest long build in 5 days is in the S&P 500. Largest short build in 5 days is in the FTSE market. So it's just showing you where the positioning is happening. So let's have a look at some key charts for you now. So firstly, we'll be kicking off with the Bund. Now, I only use, most of our younger traders, I'm part of, unfortunately, the older school generation, but most of our younger traders use volume value areas. I use TPO value areas. I know there's an argument on both sides, but when you know how you've been using your tools and the deviations of your tool and how they work, well then sometimes just stick to it, but always not being an old dog and willing to continually learn and evolve. So what my weekly value area high from last week is 159. Sorry, I think that is actually, if I just get it again, is 159.81. 88 was the previous week, so 159.81, and then the weekly value area low, TPO wise, is 159.15. So down here. So yesterday we literally, bar the future. So in the entire cash session, we never actually traded above the 159.81. I think maybe one tick, but it was always pre-cash and post-cash that we've actually held below this 159.81, and this is quite an important area. Any trade above the initial balance high of the week, 159.96, you'd expect the market to really open up some momentum towards the upside and towards 160.38. This is a very hardly anything got traded over here. So this was over an overnight FOMC, so this is the day after FOMC. So the market really, this is quite a significant rejection zone of price. So it's a really important swing high over here, this 159.96. Any trade above it, well, there's really literally a vacuum to trade beyond that point. And then 160.38, you start breaching over there, well then I start having what I call magnetic targets. Magnetic targets are ledge structures for me. So if you look at this, if I show you over here, we have quite a significant ledge over here, and then we have another significant ledge over here. So if we start trading into this territory, we start putting our flag into this value area zone, well then I see the market naturally gravitating towards the 160.74 and actually moving towards the upside. And as well towards 160.99, and I'd look for momentum plays. If we see on the order flow some really strong auctioning activity, it's all well having your chart structure, but also understand your order flow plays of how you want to execute. So any move to 160.74 with good auctioning activity and a strong integrity in the bid of how it absorbs any selling pressure, well then you have to kind of be aggressive on the long side towards the upside, provided you're seeing that type of activity. Towards the downside, now we have opened today within value, within range of yesterday, even given the French election debate results. We gapped lower from the overnight. Now what will be interesting, if we start trading up, well then what's happened, it's created the elastic effect for the market maybe to move aggressive to the upside. However, if we start trading lower, we've got this little ledge, this triple TPO, one tick off yesterday's low, and I see if we start trading below the 38s, I think we should really gravitate quite easily towards this heavier ledge structure over here if you combine these two market profiles and start hitting towards the 159.15. If we have rejected last week's value area high, well then the market can just start rotating towards 159.15, but we'd have to take out first the 38. We take out the 38, there's nothing really stopping the market in this area. We start heading into the initial balance of Friday, and once we start hitting to the initial balance of Friday, the fact that we couldn't do yesterday, and if we do probe higher, then you'll start becoming quite happy being on the long side. So just be alert, the people just picking up some positioning. Keep an eye on the bobble and the Schatzer short end. Any of this French election risk on, people could start be using it to get positioning into the target LTRO later in the week, and they could see this as good pricing as expectations build up for a very very big pickup. So that's the Bund chart for you and what we're looking at. Quickly at the Euro stocks, we spoke about that positioning. You can see the Euro stocks for 1, 2, 3 days just sitting in value, and that's what it's been doing. That's effectively what it does. Now that we're trading at these these incredibly high prices, we've just been in upward momentum since Trump elections. What effectively is happening is when the VIX or the V stocks volatility index starts becoming compressed, your ranges become tight. the opportunity. Not many of our traders are trading the Euro stocks, to be honest. They're all busy in the bonds and the currency space, so no intellectual market. But just keep an eye, for the downside, and we try and avoid looking at downside levels because it always becomes a constant bull trap. But if we do trade below 33.50, you can see there's not much TPO or volume support. The first little support area is all the way down here. So just keep an eye, if we do trade that, we could kind of quite easily test the 33.35s. As for the upside, if we're just building more structure for another catapult, another launch to the upside, that would be interesting. But I'm not going to be picking out too many levels over on the Euro stocks for you, because that's not where our time is being spent at the moment. The market, when it flushes positions, then that's when our traders will start getting involved. When a market really moves the first day, you don't need to get the beginning part of the move. You can just get the meat and potatoes, which is kind of more the middle part of the move. Okay, I'm not going to be covering the S&P 500 now because I am running out of time. As usual, I seem to sometimes continue to talk for a little bit longer than what's expected. So let's just finish off, with some final things. That's what I want to show you. This is the Euro stocks. You can see we're in long and short positions, which is new positions. This is blue line over here, and this blue line over here relative to average is quite significant. So just be alert to this. Is this going to kind of create some type of momentum plays? I don't use it specifically, but I know some traders do. So and sometimes when you do get skewed positioning, then just be alert that market might have a move that's rather eminent. Okay, so finally, always like to end up with a little quote. Know your terrain, and what I mean, whether you are, fishing, if you're going to fish in a lake that's polluted with oil, you're not going to catch much fish. If you go and fish in the great lakes of, down in, the great Colorado plains, and you'll find some significant, significant catch. And it's the same in the market. Know what type of technical landscape. Know, more importantly, for our younger traders, when there's certain types of order flow activity where prices are just getting pulled, and there's that you can't execute a momentum setup. So really important. A sportsman, whether he's playing cricket, he always understands and judges his pitch according to which continent he's playing on. So always know what to deploy, what type of skill sets to deploy, given the changing terrain and the changing order flow environment when you are trading. So for streams for the rest of the day, always exciting. Today is our live trading floor, Traders in Action, so you'll be able to watch us live trading the UK CPI, see our position, see all our traders, how they're managing themselves in the position. So that's really one of our exciting streams. And then in this afternoon, between 4:45 and 5:15, we have the great stream with Joe Carey, order flow trading strategies, just looking at ladder, just looking at play, so you really enhance that skill set. And as you can have noticed in our information area, we launched our YouTube channel last week, as well as our Axia Futures Instagram channel. Follow us on Twitter. Some really good tweets that are going out there. Any information you want to ask us, anything about our various offices, we do have expanded into a few territories, but we also offer a large online community, info@axiafutures.com, and our website will be going live very soon, www.axiafutures.com, and we'll be really excited when the website does launch, and really embracing everyone with how we want to develop skills in-house and how we could really develop skills for everyone out there. So all the best of luck for today and for the trading session.